And obviously for me with Bitcoin, I'm looking at the long term. I love Bitcoin. I think it's got a huge future, but you still have some stuff that have to be sussed out here. Number one, if you zoom out on the chart, and we can see my chart here, that this, again, it's a nice bounce, but you're still in a downtrend. You're still in an overall downtrend. And I think people have to be aware of that. And I would dare say that without the Fed's printing of money, Bitcoin is still headed towards 12 to 13,000 and maybe as low as 9,000. Like I always say, there's always opportunities in the market. You just actually sometimes have to look a little bit harder. In bull markets, everything goes up easy. In bear markets, there's still opportunities. You got to do some research. So to become a master trader, you have to get your own discipline under wraps, meaning that the keys are going to be following strict rules. As soon as you kind of go outside of your box, of your disciplines, that's where the market ends up eating you alive. So always remember, discipline, personal discipline when it comes to trading is paramount to success. The second thing is understanding human psychology. And this comes in where, many people were buying Bitcoin at $65,000, $67,000, $69,000. And obviously that was the wrong time to do it. They were doing it because they saw everyone else doing it. One of my biggest principles is when you see everyone else doing it, you do not do it. In fact, step back, and it might even be a good shortable opportunity if everyone is buying an extended chart that's making new all-time highs continually. And lastly, it's the charts, right? The charts are basically representations of human emotion. Remember, buyers and sellers are the ones that are buying. A chart goes up, selling, the chart goes down. So it's representing millions, if not, multiple millions of people in a market. And therefore, you're reading their psychology. You're reading their greed and their fear. And the charts are like a puzzle. Every piece, every time you get a new piece of that puzzle, it tells you a little bit more to do or what the chart is likely going to do. And always remember, it's all about probabilities. You want to be the casino, not the gambler. I'm not a momentum trader. I think a momentum trader is a gambler. You're making your dollars. We're working hard to make money. You don't want to take risks with it unless it's a high percentage probability you're going to be successful. So I do think that's a concern. I think that's something the regulators are going to have to look at. Like, do you kind of have a monopoly in terms of institutional investors using some technology like this that the retail crowd does not have at their disposal? And is that, or should it be legal? And I would dare say that, again, it's all about keeping an even playing field for all investors. And obviously you have institutions that they have information slightly quicker than the general public because we do not tune in quite as much as they do. But overall, they can still buy and they sell. Now, if you get an algorithm that's an AI and can actually start gaming things, then that could be problematic. It's just once you get into saying, okay, let's let this bot go trade on its own and learn and do whatever it wants to do, that gets a little scarier when you're dealing with a financial system of hundreds of trillions of dollars. I mean, again, we all know what happened during the Great Recession. You kind of throw this to the AIs, who's to say where it's going to end up? Notice how we made new highs from the early 2021 high, but there's something called the confirmation signal. This is something I teach in my course, the Winning Trader series. But look at how this high here, all right, notice how you closed above the high and then you reversed. And then you closed above the high here again. It tried to break out again. What basically you need to do, you have to have a close above the key pivot, which was this trend line, which you saw here and here. And then you need a secondary close at a higher high. Pivot, higher high here. Notice how that never happened over here. And to me, that was telling me institutions were dumping into it. If you think about how much irrational exuberance and buying there was from the retail crowd at these highs, this Bitcoin chart should have blown through that level if the institutions were not dumping into it. The long story short, without confirmation, it was not a true breakout. And in fact, it turned out to be a classic M pattern top, right? Double top, M pattern top, which again, in technical analysis, when you learn it, you start to pay very close attention to those type of pattern tops, especially when you have negative divergences. And let me just speak about this real quick. What's the negative divergence? The negative divergence was that in April of 2021, when you were at 65,000, you had hype. When you were at the same level in price, you had basically double or triple the hype. So what I'm saying is the hype was higher, but the price was not matching that. It was a negative divergence in price. And again, you can even look at the RSI and you can see this negative divergence building as well. So I lost a lot of money. Thank goodness I didn't have a lot of money back then, but to me it was a lot when I, had a $10,000 account and I would lose 30, 40, 50%, every so often in my account by just making bad trades. If I had the ability to learn this stuff, I would have cut my learning curve by an enormous amount of time, years, and I would have at this point, I'd have so much more money than I do right now. And I think that's important for people to recognize. There's no easy shortcut. The market makes you pay, or you pay for education. The route of education is always the cheaper method. Make sure you don't put all your eggs in one basket, especially with the price of eggs these days, right? You want to make sure that you allocate small amounts of money to different areas so that you do not kind of go boom or bust on one trade. So you can like the Chinese stocks and they can still go down. If you allocate a small percentage of your portfolio, it's not the end of the world. You want to be unemotional, analyze that chart and go from there. I still think gold will be the best performer. Right now, Bitcoin's leading, obviously, since the start of the year. The S&P, I don't think quite is at this point, since gold's had a pretty remarkable move to the upside. But the bottom line is that you can't get away from the fact that the Fed is now keeping interest rates where they are. They're probably going to tighten a little bit more. But the bottom line is they're not going to be looking to cut until we see a massively nasty recession. So if we get in a little low-level recession, which is where I think we're going to go by second half of 2023, the Fed's not going to be rushing to the aid of the market because they remember it. And Powell has said this. He said that we're not going to repeat the mistakes of Volcker in the 80s. And what Volcker did was he cut rates too quickly and we saw inflation roar back. So you have to keep in mind, they already are telling you their game plan that they're going to tolerate a low-level recession. If it turns into a really bad one, eventually they're going to be forced to do that. But think about where stocks are going to be. And obviously for me with Bitcoin, I'm looking at the long term. I love Bitcoin. I think it's got a huge future, but you still have some stuff that have to be sussed out here in Bitcoin, including regulation, including flushing out a lot of these hands. And again, one of the biggest issues with Bitcoin I have right now is that this run in Bitcoin has almost the same hype to me that Bitcoin had at 65,000. And that is really a concern. If you look at past bear markets that finally went bullish, the first 20, 30, 40% of a move in a stock or in a market, investors were extremely hesitant. They didn't believe it because they had been hammered so badly. That's not happening with Bitcoin, and that does concern me. Number one, if you zoom out on the chart, and we can see my chart here, that this, again, it's a nice bounce, but you're still in a downtrend. You're still in an overall downtrend. And I think people have to be aware of that. In addition, you have to also remember that the Fed, this is the first bear cycle the Fed is not printing money. So the question I would say is, well, what does that mean for this cycle? Is it an elongated bear market because of that? And so these are the things that you want to pay attention to. Now, if you look here as well, in 2020 and 2018, we kind of had this same sort of almost rounded bottom like we did back, we just came out of, and you did have this run up. But then look at what happened to price. It came back and basically retested that $3,500 level. And I think that, again, is a good guidance level for what we're going to see here. And that would just be a retest. So you're looking at going back to 16,000 or so. All right. On the other side of the coin, the negative here and why I think it could go lower is that if you don't have money being printed, and the stock market does decline by as much as 25% in 2023, like I'm predicting, where is Bitcoin? Where are other asset prices that are risk on assets like Bitcoin? And I would dare say that without the Fed's printing of money, Bitcoin is still headed towards 12 to 13,000 and maybe as low as 9,000. In 2017, I was short the market. I was down on a lot of my shorts because I was trying to fight the Fed. And everyone kept saying, don't fight the Fed, don't fight the Fed. The Fed is telling you they're printing. That was the right move. All right. Now, all of a sudden, they're not printing and they're sucking money out. They're reducing their balance sheet. They say they're going to keep. Yet for some reason, everyone's like, oh, new bull market. Like everyone wants to fight the Fed. Yeah. That's part of our human psychology. We want upside in the market. We want to make market. We want to make money. But just keep in mind, if you weren't supposed to fight them on the way up, are we supposed to now fight them on the way down? I would say probably not. It's a bear market now induced by the Fed where they're actually sucking out liquidity. And granted, the Fed will stop hiking. I think there's probably another 25 basis points, maybe two more of them. But the bottom line is that even when they go to not raising, they're not going to be going to cutting. And that's a concern because you're not going to see that flood of liquidity. And then if all of a sudden you have stocks taking another leg lower, that sucks more liquidity out. Remember, the asset markets are tied together. People that have crypto have stocks and vice versa. And fear and panic are they're the biggest human emotions, right? That fear is going to catalyze the downside move, I would say, in Bitcoin. And that's what I'm predicting. I do think that we still have more downside on Bitcoin, unfortunately. I do think it has maybe a little bit of pullback, but I think silver is going to break out from this longer term trend line right here. In the short term, I actually am a big fan, and this is just a short term trade. Please understand, this is one for the next month or two, but I continue to be long natural gas down here. Natural gas, again, it was all pumped up here, and now you have this mass exodus of people and institutions down here, but you're getting to levels where it actually makes a sense to be a long trader on natural gas. So I think natural gas could have a 20% pop back from this level, maybe even 40% off of these $2.80 levels. And then also I think you start to, as we see some downside, you start to look at other markets. And I think in the past interviews, we've talked about the EWZ, which is the Brazilian stock market. Look at the macro pattern here. If you're looking for other places to invest, look at that trend line. Now, we haven't broken it yet, but if you break above this trend line on the EWZ, the Brazilian stock market ETF, this could be a major breakout. And just think about this. If this market just goes back to its highs from 2008, just its highs from 2008. Now, think about where the S&P is compared to 2008. But you're talking about a 3x on your money just to get back to those highs. So I do think, like I always say, there's always opportunities in the market. You just actually sometimes have to look a little bit harder. In bull markets, everything goes up easy. In bear markets, there's still opportunities. You got to do some research.